You do not beat structural inflation with loose monetary conditions. You just don't. You need to have restrictive monetary conditions. And then we have this whole psychology of all of us, all market participants for 14 years, just basically chasing every single Fed pivot along the way. Markets just went full ball back into that. I mean, that's what we saw with stocks like Bed Bath and Beyond. I mean, it was just reminiscent again of 21. The optimism came back. The shorts were covering, and everybody's calling for new highs again. I mean, that was basically the sentiment just until a couple of weeks ago. And the problem with all this, in addition to this, after Powell's perceived dovish pivot, every other Fed speaker that came out since his speech or press conference in July was completely ignored by the market, because they were talking about going to 4%. They were talking about going restrictive. No one cared. No one was listening to all this. And I think, and this is just my take here, I think Powell got really frustrated with all this. And he shot it all in the head on Friday in a terse 8-minute speech. And it gave everybody a head washing. The Fed's not done. Inflation is not going to come down to 2% anytime soon. And financial conditions are going to tighten in the sense that the Fed is actually going to go restrictive. And this is really important. We are not at restrictive yet. We haven't been at restrictive since before 2007. Okay, this entire run since March 2009 lows has been run on loose monetary conditions. The only little wiggle point there was in December 2018 for 3 months. For 3 months, the Fed language was non-accommodative, markets collapsed. So we are all now officially, with the blessing of Jay Powell, embracing a new world, which is restrictive monetary conditions. And I think, obviously, this is what the market reacted to on Friday and today as well. And all of a sudden, there's a big reassessment. What does this all mean? And I think this is now interesting in particular because it all happened in context of these markets tagging these key moving averages and now reversing, because that leaves open the possibility that what we just seen is a bear market rally. Now, none of this is proven until you actually make new lows vis-a-vis June, but no one's in the clear now. And I think we're now in a negotiation phase in markets. You know, that is not going to be key what happens, I think, in the next 4 to 6 weeks.
If you enjoyed this video clip, click here to watch another one you should like.